Renovation loans in 2026. What you need to know before you buy the fixer-upper. Today, I'm going to break down renovation loans for you because frankly, most people have no clue how these work and they're missing out on some incredible opportunities in 2026. Hi, I'm Gurfinkel, Senior Loan Officer with almost 30 years of experience and over 2,000 families served in my lifetime. Don't like or subscribe until you get to the end of this video because I don't want you to just click a button. I want you to actually get the valuable information and make sure you're getting value out of this video. So wait till the end to like and subscribe. Here's the deal. Everybody's complaining about the lack of inventory, right? There is nothing to buy, Ella. Well, guess what? There are homes to buy. And if you know where to look and if you're working with the right professionals, I'm talking about fixer-uppers. And before you roll your eyes and think, I don't have the money for that, let me stop you right there. You know what the biggest mistake I see people make? They think they need two loans, one to buy the house and another to fix it up. Wrong. That's exactly the fear porn the media wants you to believe. There is a better way. And I'm going to show you exactly how it works. So what the hell is a renovation loan? Simple. It's one mortgage that covers both buying and fixing up the house. One loan, one monthly payment, no juggling multiple payments, no dealing with construction loans that will eat you alive with fees. Think about it. Would you rather have one mortgage payment at today's rates, or would you rather have a mortgage plus some crazy-ass expensive personal loan or a HELOC at 9% or higher? I think you can answer that one for yourself. I hope. Here is how it works. You find a fixer-upper, you get contractor bids, the lender calculates what the house will be worth after you fix it up, and boom, you get approved based on that improved value. The renovation money sits in escrow and gets released as you complete the work. Now, let's talk about your options. And I'm going to start with an FHA 203K because this is probably going to be the best fit for the most of you watching this video. So FHA 203K is a government-backed loan, which means lower down payment and more forgiving credit requirements. We're talking 3.5% down. Credit scores as low as technically 580 for the renovation loan, usually a little higher. So compare that to what the big box banks will tell you. They'll want 20% down and perfect credit for anything remotely creative. There are two versions. The standard 203K for major work. We're talking structural stuff, additions, the whole 9 yards. And then there is the limited 203K for smaller projects up to $75,000. Think kitchen updates, bathroom remodels, that kind of thing, mainly cosmetics. Here is the catch, and I'm always going to give you the real deal. No sugarcoating. You've got about 6 months to complete the work. No dragging your feet. No, we'll get to it eventually. The government wants to see results. Damn it. Now, if you want more flexibility, let's talk about the Fannie Mae Homestyle renovation loan. This is the conventional option, and here is why I love it for certain clients. First, you can use it for investment properties. FHA, nope, owner-occupied only. But Homestyle, you can buy the duplex, fix it up, and rent out the other unit. Smart money move right there. Second, the conforming loan limits went up for 2026. We're talking $832,750 for most areas, up to $1.2 million in high-cost areas. That means you can do some serious renovations without getting into jumbo loan territory, which is going to save you money. Down payment? As low as 5%, sometimes 3% if you qualify for certain programs. And here's the kicker. Since it's conventional, you might be able to get rid of that mortgage insurance down the road, unlike FHA where you're stuck with it. All right, let's get real about the pros and cons because I'm not here to blow sunshine up your ass. Never do. The pros. One payment, you can create serious equity, lower barriers to entry than most people think, and you can tackle properties other buyers are scared of. And by the way, that means more room for negotiation. Now, the cons. Construction delays happen. Yes, they do. Seen them over the years. Contractors aren't always reliable. Shocking, right? The appraisal has to support your after improved value, which can be subjective. And not every lender does these loans properly. You do need someone who knows what the hell they're doing. So here is something most people don't consider. You need detailed contractor bids before you apply. Don't come to me with, I think it will cost about $50,000 to fix up. That's not going to cut it. Get real quotes. Add 20% contingency because stuff always costs more than you think. So why am I telling you about this now? Because 2026 is actually a great time for renovation loans. And here is why. First, inventory is still tight, but there are fixer-uppers sitting on the market because most buyers are scared of them. Less competition for you. Second, even though rates aren't in the 2s and 3s anymore, oh, and by the way, those were a once-in-a-lifetime fluke, black swan event, we're not that far off from normal. Normal is 5.5 to 6, not 2.5. So please stop listening to the fear porn. Third, you lock in one rate for everything instead of getting killed on multiple loans. Smart money management. Look, if you're serious about buying in 2026 and you're not afraid of a little work, renovation loans might be your ticket to homeownership and building real wealth. But here's the thing. Do not try to DIY this. I know TikTok makes everything look easy, but real life ain't the social media. You do need professionals who know these programs inside and out. Oh, and by the way, HGTV does make it look easy too. Not that simple. So if you want to explore whether a renovation loan makes sense for your situation, book a time with me. It is absolutely free, and we'll have a very blunt and honest conversation about what you can and cannot do. Let's connect and talk about getting you into your own home, potentially with some serious equity built from day one. Now that you've gotten the real information, was this helpful? Let me know in the comments below, and I'll see you in the next one.